Please take a moment to familiarize yourself with our risk disclaimer. How are payout and probability related? Taking what you just learned into consideration, let's examine the relationship between the probability of you winning on your trade and your payout odds. The higher the probability of you winning on a binary option trade, the lower your return on investment will be. And the lower the probability of you winning, the higher your return on investment will be. So let's quickly review some basics. If the underlying is above the option strike price at expiration, the option value will be $100. And your payout revenue will also be $100. The further a strike price is below the market, the more expensive the option will be, and the more likely you are to win. So we're going to take a look at the difference in probability and payout in regards to in-the-money long trades. So if the futures price currently is 1631, we can see that any of these binary options that are significantly below 1631 will cost much more to get into a particular trade. So perfect example, we have a binary option that's currently trading for $99. If I were to try to enter this trade now, I would essentially make $1 profit while risking $99 overall. That $99 would also be my collateral. With out-of-the-money long trades, the further a strike price is above the market, the cheaper the option, but the less likely you are to win on your trade. And once again, you are always receiving the same maximum revenue of $100 if you are correct on your trades, and your return on collateral will be lower with the higher probability trades and higher with the lower probability trades. Now, in regards to more of an out-of-the-money scenario, as you can see, this binary option for 1643 as its strike price, if you were to buy this particular binary option, you would risk $14.50 to potentially make $85.50. The biggest difference is that this binary option is very out of the money, and the market would have to move over 11 or 12 points just to get above the strike price to profit on this particular trade. For short trades, your revenue at settlement is also going to be $100 if you are correct. However, the expiration value of the option is going to be $0. For in-the-money short trades, the further an option is above the market price, the more likely it will expire profitable for the short trader. Therefore, it will have a lower premium and a higher collateral. Since you always get the same $100 payout revenue if you are correct, the deeper in the money you go on a short trade, the higher your chances of winning at expiration and the lower your payout odds. So let's use an option chain again from a live platform to illustrate the probability and payout for short trades. So again, we have an option chain on gold futures, and the market is currently trading at 1631. Now if we were to take one of these in-the-money binary options, for instance, like the 1646, which is extremely in the money if the market's trading at 1631, we can see that to sell this particular option, our maximum profit will be $2.50 because it's a much higher likelihood of this particular option expiring in the money. And therefore, you would have to put up $97.50 just to make $2.50 back. For out-of-the-money short trades, the further an option is below the market, the less collateral you will have to put up. However, in order for you to win on the trade, the price of the underlying actually has to drop below the option strike price, therefore your chances of winning are lower. And once again, since the payout revenue if you are correct is always going to be $100, the more likely you are to win, the lower your payout odds, and the less likely you are to win, the higher your payout odds. So let's use an option chain again from a live platform to illustrate the probability and payout for short trades. So again, we have an option chain on gold futures and the market is currently trading at 1631. An out of the money short trade is going to have less probability of expiring in the money at expiration, so it's going to be priced accordingly. Now, as you can see, a 1631 strike price is currently trading at about 82. Okay, and this means that the market participants feel that the price is going to be below 1631. Okay, so let's take a look. If we were to try to sell the 1619 strike binary option, because this particular option is very out of the money, we would essentially put up $4 to make 96. However, the market would have to move close to 20 points for this particular binary option to actually expire in the money and settle for a profit. Thank you very much for watching this video on binary options. Make sure to check out the next video in our Master Series. And to get strategies and trading ideas from seasoned traders, make sure to check out our strategy guide.